This MACD variant strategy I'm about to show you is so profitable, and when I say MACD variant, it basically means that this strategy doesn't use the traditional MACD indicator. Instead, it uses a newer and improved version of the MACD called standardized MACD. Let's dive right in because I'm going to show you all the indicators used in this strategy as well as the entry and exit conditions. Let's get into it. Now, let's begin by adding the main indicator of this strategy. As mentioned earlier, it's called standardized MACD. To add it to your chart, you're gonna go to TradingView, then load any trading security that you like in any time frame. For me, I'm gonna be using the 15-minute time frame of GBP USD. Then click on Indicators, type in standardized MACD. Select this one called Standardized MACD Heikin-Ashi Transformed, created by Quantilux. The standardized MACD is an advanced indicator designed to overcome the limitations of the traditional MACD indicator. It offers a more robust and standardized measure of market momentum, making it comparable across different timeframes and trading securities. By incorporating the Heikin-Ashi candles, the standardized MACD provides a smoother visualization of trends and potential market reversals, enhancing its usability for traders. Now let's go over its key features and functionalities. This upper red level is called the overbought level. This lower blue level is the oversold level. Now, just like the traditional MACD indicator, the standardized MACD also contains the MACD line and the signal line. This white line traversing the indicator window is the signal line. And these Heikin-Ashi candles represent the MACD line. The crossovers between the MACD line and the signal line are going to be used as buy and sell entry points. When the MACD line, these Heikin-Ashi candles, crosses above the signal line, that indicates a potential entry point for long positions. On the other hand, whenever the Heikin-Ashi candles cross below the signal line, that indicates a potential entry point for short positions. Then this is the MACD histogram, and this white horizontal line is called the midline. When the MACD histogram is above the midline, that indicates a bullish market momentum. On the other hand, whenever the MACD histogram is below the midline, that indicates a bearish market momentum. Now, what about these blue and red arrows? Well, the red downward arrow is going to be printed when the market is overbought. This basically happens whenever the MACD line enters into the upper horizontal level. Conversely, the blue upward arrows indicate oversold market conditions, and they're going to be printed whenever the MACD line goes into the bottom horizontal level. Now let's add the traditional MACD indicator to the chart so we can compare the two. Now, as we can see, the difference between these two indicators only comes from these two horizontal levels, the Heikin-Ashi candles used in place of the MACD line, and these up and down arrows. But for the rest of the features, these two indicators are pretty similar. The use of Heikin-Ashi candles in place of the traditional MACD line provides a smoother visualization of trends and potential reversal points, enhancing this indicator's usability for traders. Now, as opposed to the traditional MACD, the standardized MACD also includes horizontal levels at the 100 mark and the minus 100 mark to serve as the upper and lower extremities for this indicator's analysis. This basically gives the standardized MACD the ability to be used to identify overbought and oversold conditions in the market. As you can see, right here, when the MACD line entered into the overbought level, a red downward arrow was printed, indicating a potential entry point for a short position, something that wouldn't have been available on the traditional MACD. And then here, the market pushed the MACD line into the oversold level, and then a blue upward arrow was printed, indicating a potential entry point for long position. If you were to enter a long position here, that trade would have been profitable. Next, we're going to access the settings of this indicator so we can customize it to our strategy.